What was your biggest takeaway from the report?
I think so far so good. I think analysts were looking for a higher ROTCE target. That was the main thing. I think most people were hoping for 17%. So I would say that, so far what we've learned from the slides are basically in line with optimistic expectations.
So why is the stock down?
I think because, again, you're in line with optimistic expectations. I mean, let's look at the stock so far. The stock so far, it's up 12%. Financials are up 6%. The market's up 4%. And that's just year to date. So that's not even thinking about some of the outperformance that we've seen. And again, so when we look at some of the other targets, the 11 to 12% CET1 ratio, I think that was widely expected. It was signaled at last year's Investor Day. That's coming down from an 11 to 12.5% range, so just narrowing that range. And then the 100% payout, again, if you did sort of the math based on any numbers they gave you last year or throughout the year, it was something that they could easily do. So again, very optimistic versus the 55 to 75% ratio target they've had in the past. But I think people sort of saw that coming. So and again, the stock's trading off. It's sort of a little bit after a good run.
So going below the top line numbers, do we know what's driving it? Is it across the board, or are there particular parts of its business where that's driving this result?
So that's a good point. So looking below the numbers, so net interest income about in line with expectations. Costs, the overall number looks a little bit higher. It's a little bit hard to tell, so we're going to want to hear more about that from management. But the cost ratio right in line with the 55% that they have. The card business, that's been a focus of investors. It's something that we've focused on during the earnings because it has been coming in at the higher end of the guidance, and the range is a little bit higher than they had previously said. So they had been sort of targeting this 3 to 3.25. That's going to be 3.25 to 350. But again, they had already sort of guided to that. Loan growth might be the other thing that, 6 to 7%. Again, we'll see how that, progresses throughout the year. I think investors are going to want to hear more about that. And then, passing the benefit on to consumers.
Yeah,